meeting. This meeting. Which one is,
I'm gonna.
okay.
So I'm just gonna do, go over some variance analysis for everybody, just, to explain some, differences between what was budgeted versus what actually happened, and then, changes between last year and this year. And so I've decided to keep it to any changes over $1 million, so I'll be going through that with you. And then if you have any specific questions, I'll probably rely on Eleanor to answer, because she was heavily involved in preparing the financial statements. So I am going to start with going through the statement of financial position. So if you have a second, you can scroll to that. It is, I think it says it's like the page 6, but at the top, it'll be the page that talks about, that has the assets and the liabilities on there. So what I just wanted to draw your attention to, so the first item would be the differences over $1 million is the first thing is cash. And so usually when we're talking about cash, it's what's sitting in our bank account. And the difference between this year and last year, the cash has increased by 1.4 or almost 1.5 million. And usually with cash or bank accounts, it's just the timing difference. So for instance, the timing difference between what we've received for funds and what has been paid out. So that is a constantly changing amount. So that's the difference for that. And then for liabilities, I'll draw your attention to that next. So the first one would be accounts payable and accrued liabilities. And that has decreased from the prior year by around 2.6 million. And the reason for that is that at June 30th of this year compared to the previous year, we had less outstanding invoices with vendors. And also we had, at that time, we owed less in payroll, 1.2 million less in payroll than the previous year. So that's just the difference for the balance sheet items. So if you ever hear me say statement of financial position, or even auditor say that, that you may be familiar with the term balance sheet. It's the same, sort of the same accounting lingo. And then the next item where there's over $1 million in difference would be unearned revenue. And so unearned revenue is money that has been received, but we haven't earned yet. And so that in relation for us, it's gone down by just over $1 million. And that is due to the fact that we have 123 less international students than we did in the prior year, which makes sense because of COVID. And then the next item, when there's over $1 million in difference from the previous year, is deferred capital revenue. And that has increased by 5 million. And so just to explain what deferred capital revenue is to everybody, it's revenue that we have received that similar to unearned revenue that we haven't earned yet, but it's specific for capital purposes. So it could be for building a school or doing some kind of capital construction. The reason for that is we received 5 million in capital contributions. So that's grants from the province in the 2020-21 year. So we received an additional 5 million compared to the previous year. And then just overall, our net debt has increased. So basically our debt has increased by just 3.2 million. And most of that is related to the deferred capital revenue because we received money and we haven't recognized it yet for the capital projects that will be coming up. That's why. So it's not like we actually owe that money to some like an individual or any vendor or anything like that. It's just when we have construction projects for, let's say, like a school, we recognize it. We recognize the liability over the life of the school. So that's something specific for public sector accounting standards. And then the next item is non-financial assets, tangible capital assets. So that has increased by 4 million this year. And that's due to an increase in capital additions. So in the last year, we've done the school district has done some work on building envelope upgrades for Pemberton Secondary School and Garibaldi Highlands Elementary School. So those are two significant capital projects that are underway at the moment. They're not complete, but it's like a multi-year huge project that's under construction. And then we've also purchased some buses, about 500,000 buses, and there was also some IT purchases as well included in that. Any questions on that before I move into the financial operations income statements section? No? Good.
Can I ask one really quick question?
Sure.
So this was the page that I had a lot of questions about, which you've gone through and preemptively answered. Very wonderful. Should we expect such big changes from year to year? It was a surprise to me to see such big jumps. So for example, for accounts payable and accrued liabilities, from year to year, I mean, you would have had a better look at sort of over a 10-year period. Would you see big jumps like that? Or is this an anomaly because we're in times of COVID and things are different for whatever reason?
Accounts payable on the balance sheet basically represent outstanding invoices, and it's just timing.
It can fluctuate
It's
based on the
it's
timing.
dependent how our invoices are submitted to payment, and once we paid it, it's not on our liabilities as financial as account schedule. And pretty random. It depends on how paperwork circulates and how quickly approve and push for.
That's helpful. Thank you.
Yeah, there's nothing there to me that looks out of the ordinary, but that, yeah, like it's a snapshot in time. And so that with balance sheet items, that can change day to day, so. Yeah. Income statement is a different, so statement of operations is a different story, so I'll move to that next. Okay, so the next it's actually according to the package there, it's the statement number 2 there. We're gonna go through the statement of operations. So just to let you know, so I'm gonna be going over the changes in budget to when we set the budget to the actual, right? So just for your information, for public sector accounting standards, we're required to use the original budget that's been set. So there may have been amended budgets throughout the year, but because the accounting standards require us to use the original budget, you may see some differences in that you're aware, like, oh, we got extra funds that we're aware of, but we're not allowed to adjust the budget numbers to reflect that. And so that will be some of the explanations of why there are changes. So we can go through first one I'm going to touch on is revenues, and then specifically provincial grants provided from the Ministry of Education. That was higher, about 7.2 million than the than the budget. And the increase is due to 2.4 million in new safe return to class grants. So those are just COVID type of grants. We also had 1.2 million in enrollment increases and per student funding increases. And then we also had received money from the government for 1.8 million in equity and labor settlements. And also 1.8 million in other provincial grant increases. So a lot of those weren't expected. Well, we didn't realize that we were going to be getting that funding. So that is why there's some substantial difference between the budget and actual. And it's great to see that we got that extra funding, because if you look at the original budget column, we were forecasting a deficit. And so now we obviously are pushed over to a surplus now, which is great, thankfully, because of those grants. And then I'll skip over to expenses, because the rest of those numbers aren't large changes. So expenses for instruction, the actuals are higher by 3.3 million. And so the difference is there from the budget. So we have an increase of 5.1 million in salaries and benefits, but that is offset by a decrease in 1.8 million in services and supplies. Okay, and then for operations and maintenance, the actuals are higher by almost 1.4 million. And that is due to some salaries and benefits, as well as operation and maintenance expenses. So those are expenses that would not be capitalized. And the next thing for that, so I mentioned to the surplus and accumulated surplus is higher than budget, and that's due to those extra grants, thankfully, that we received during the year, so that's great. Which has pushed up our accumulated surplus is higher than what we had anticipated in the budget, which is great. It's a good sign for the school district. So before I move on to actuals, is there any questions on that? No? Okay, I'm gonna keep you on the same statement of operations page, and now I'm just gonna do a quick comparison of last year's to this year's, the differences. So any changes over $1 million, provincial grants from the ministry increased from the previous year, 6 million, and they're basically the same reason as why there's a difference in budget to actuals for this year, is that we received extra money for safe to return to class grants for 2.4 million, plus the 1.2 million in enrollment increases and per student funding, sorry. And then the 1.8 million equity pay and labor settlement, and then just to top that off, there was 0.6 million in other operational grant increases. So pretty much the differences between revenues between actual and budget to actual are the same reasons, pretty similar. And then the other thing you may have noted is that tuition's down from last year by 1.7 million, and that's because we, as mentioned, we have 123 less students, international students than the prior year, last year. And then expenses for instruction, they increased by 3.67. And that's specifically for teachers, EAs, and 1.2 million for other salaries and benefits. That is, so basically Eleanor and I are probably going to be working on putting together some more detailed financial analysis for the board in the next coming months. And so we can provide you some more insight onto the financials then. But does anybody have some questions? Any questions before we go to the auditors?
Yeah, hopefully that's good. That was really good.
Thanks.
Okay. All right, so next up we have a report on financial statement audit. Grant Thornton.
So it's Donna.
Hi, Donna.
Don't you want me to start? Hi. We also have Nolan here from our office, who's the manager on the audit. And I understand we have just limited amount of time, so I wasn't going to cover everything that's in our report, but maybe just cover the highlights for the committee and for the board perspective. And maybe first thing is just to talk about kind of where we're at in the audit process. So we did do our year-end audit starting early August, and happy to report that we've completed our procedures and are now in a position to be able to provide you with our audit report. Basically, once the board has approved the financial statements, which will happen, if I'm correct, this evening, if I've got that right. So once we get board approval, what we'll do is we'll ask management, our management representation letter. We'll update our subsequent events review up to today's date, and then we'll be able to finalize our audit report and the financial statements so that they can be sent to the ministry well ahead of the September 30th deadline. So that's, I think, a good news story from being able to provide everything in time. So that's kind of where we're at. I think one of the things we wanted to highlight is just this being an unusual year because of COVID and the way that we did the audit. And maybe I'll ask Nolan just to talk about the impact of COVID on the audit process this year.
Sure. So as a result of COVID, we didn't actually go out to the offices of the school district, especially as the first year auditors for us taking it on this year. We typically would like to. With that, we were able to utilize a combination of phone calls, emails, live file sharing platforms, and video conference calls to sort of have the correspondence we needed to get through the audit. And in the end, we were able to vouch down to the same type of information we would typically get if we were going out to a school district in person, as well as perform all the procedures that we had originally planned. Otherwise, just as part of the impact of COVID, a lot of organizations were changing the way they're processing controls because some staff were working from home for periods of time. So as a result of that, we have to ask inquiries to management as to whether there's been any significant changes that could impact, or to internal controls that could impact our audit approach. And from the discussions we had, there wasn't anything that would substantially change how we were doing the work. Are there any questions there before I continue on?
I don't see any.
Okay. The next piece I wanted to touch on was the COVID funding received by the school district during the year. So as part of the relief from the government to help support school districts through the pandemic, there was $2.4 million received by School District 48. It was mainly to be used towards operational side, so increased cleaning and PPE, stuff like that, as well as some capital side, upgrading structures just to help handle the COVID-19 pandemic better. And so as part of our audit work we perform on that, we confirmed the amounts received with the ministry. We talked with management about how they tracked the expenses against each of the funding agreements. And then we also obtained schedules and reviewed a sample of items to make sure that they were legitimate and everything was consistent with expectations, of which we had no errors or matters of concern noted. All right, I think I'll pass it back to Tona.
Okay. So then maybe I'll just talk about kind of two important areas in the audit. One of which is capital assets, because as a school district, you expend significant funds on capital asset additions. And so we do spend time sort of in testing those additions. And there are two items that we found as part of the audit process related to capital asset additions. One is that for certain items, when the school district was recording the addition, they weren't recording the holdback on that capital asset. So they should have, increased capital assets and also recorded the accounts payable related to that holdback. So we have an audit adjustment related to that. It's not something that we would consider material, and so it has reflected in the financial statements. We have talked to management about the process, and I understand that that process will be revised going forward to make sure that those things are recorded in the future. So that's just one of the findings. And then the next item, which is similar to, I believe, what was reported on in prior years, is there are certain leases that the school district enters into, and from an accounting perspective, they would be classified as capital leases versus operating leases. So the school district, what they do is record the payments going out as expenses, where under strict accounting rules, you would set up a capital asset and set up a liability for those amounts. Again, we wouldn't consider those amounts to be material. So what we've done is we've reflected them on our schedule of unadjusted misstatements. We haven't asked management to update the statements for those amounts, similar to the approach taken last year, which was not to record them, but just kind of to note them and keep track of them. And it is a very detailed and cumbersome calculation. And I wouldn't recommend that in talking with management that be something that they change going forward. I think what we would recommend is that you continue to reflect them as unadjusted items in the future. So that's just a couple of findings from our work on capital assets. I'm not sure if there's any questions on that. Not, move forward. Employee compensation or payroll is another kind of large focus of the audit, just because it is your most significant expenditure. So as part of the work that we do there, we do detailed testing of payroll transactions. We look at your payroll related accruals and also do some analytics with respect to wage and salary costs. Nothing to report from that perspective in terms of our testing. No findings to report there. And then in the rest of the report, we do, those aren't the only two areas that we look at, capital assets and payroll, but we do testing in a number of different areas. And so we've just highlighted kind of the work that we've done in each of those areas. And again, nothing to bring forward to the committee or the board in any of those items. So I'll stop there to see if there's any questions on the procedures themselves. Nothing.
Yeah. There's one here.
I just had
There
one
is one?
comment, I don't know if this is, if you're finished reviewing the report, but I just wanted to say it was very easy to read and valuable the way that you've laid the information out.
Oh, that's great. Thank you. Just one item, and it's not related to the current year, but related to future years. And I don't remember when we had our planning meeting if we talked about this in detail. But there is a new accounting standard on the horizon that the school district will have to adopt in a couple of years' time. And what that standard, it's related to asset retirement obligations. And what that standard says is that when you know now that you're holding a property, that if you know you're going to redevelop it in the future, and that there is some sort of environmental or remediation liability that will have to be done in order to work on that building. The prime example, not the only example, but the prime example of being asbestos in the building. Then what you're going to need future is record a liability in the school district's financial statements for your estimate of the future cash that you're going to have to pay to remediate those properties. So the only thing I wanted to highlight is that it is a complex standard. The school districts are right now working with the Ministry of Education in terms of providing information, but it is something that I do envision that will take a lot of time and resources, not only from the finance staff at the school district, but from the facilities people and even outside consultants in terms of estimating the cash flows. So I just wanted to make sure that that was on the horizon, that people realize that there would be significant new work that's going to be coming through in a couple of years' time. I don't know if there's any comments or questions there. No. And the last item is just in terms of, this is our first year, and I think it was not ideal in that we would have loved to not be in COVID and come to the school district personally. I think, and so there's some challenges with first year, but there's also, because of the transition of school district staff, I think there were also sort of some from management's perspective. And so I just wanted to, Elena was a great resource for us in sort of picking up the work of everybody that had left and helping us through the process. And that there were some bumps in terms of maybe our approach was different than what the Auditor General had done in the past, and the information that we had needed was a little bit different than what the Auditor General had. So we will be working with management just to sort of to debrief on the audit process, to look at the information that we need from an audit perspective, information that management prepares on an ongoing basis, and just make sure, hopefully when we're back in person and with the full team at the school district, that it's a smooth audit process in the future. I think that's all, maybe the highlights from our perspective in terms of the report, unless Nolan thinks I missed anything.
No, I think those are all the main points.
Well, that's great. Thank you. Did anyone have any questions or anything? Not seeing any. So is our next item up then when we need staff to leave?
Yes.
Okay. So we're going to be turning off YouTube and staff will leave so that we can have an in-camera conversation with the auditors.
Do you need to go here? Not like a Zoom as well?
Yes.
Yes? Okay.
But how does-
Yeah, I'm gonna make this as a host and then I'm gonna leave too.
Okay.
Yeah.
You wanted to start from the
Screen keeps changing. So I'm not sure if we should start or not quite yet.
But it says they're still live on YouTube. Oh, yeah, sorry, I need to cancel that too. Okay. Want me to take that? Yeah.